All right, guys, let's go ahead and get started. So first off, I want to make sure. Have you guys all received the announcement for the workshops? In case you don't or you haven't heard of the workshop, this is gonna be like the first one I do. Um, yeah, if you guys have not, oh, what the hell is going on here? Okay, it's a browser thing. Let me open another browser. 1 second. Hey, so if you guys have not paid attention to the announcement for any of the workshops, here you go. I'm pretty much going to be going over everything, market structure, solidified points, etc. And the second one, I'm planning on talking about all of the models, LGC, SC, OFD, plus all the sweep variants. And then in the third one, I'm planning on talking about everything process related, from DLE to talking about probabilities to uh, building your own model, building your own trading plan, etc. And yeah, let me know what you guys think about this. Did you guys see this announcement? What do you think? Do you guys think I should add anything to any of these? Right? And also, if you're part of the community, just the free community, you do have a 20% discount till tomorrow, the end of tomorrow. Right? Till the end of tomorrow. If there's any crypto payments, just make a ticket and I will carry that out, or just DM me on Instagram, whatever you think is easier. The actual private group members, do you guys have a 25% off total discount no matter what day it is, whatever? So if you guys want to take advantage of that, just let me know. If there's any questions, please let me know. What do you guys think? Do you guys think we should add anything else here? Is there anything I'm potentially missing? Because I can always add stuff to the curriculum, because I'm going to dedicate probably the whole weekend to making this presentation. Oh, the recording comes in, bro. The recording is built into the payment. Yeah, yeah. So I'm gonna have to figure out how to deliver this in the best way possible. Um, but see this as like, so obviously you guys know I don't really want to do another course. Like those are just a pain in the ass, if I'm being honest. To make them, script them, blah blah blah. How much does it cost, brother? Please just look at your screen. The I didn't want to make another course. I just think I don't like to sit down and make hours of content in one sitting. It's very time consuming, and then if I mess up on any of the words, then I have to restart completely. So then I went for the ebook solution, and then the ebooks are pretty much complete. I don't think there's anything I can make additionally for the ebooks unless I make like the LGC blueprint, but like dedicate that to like individual aspects. Um, so yeah, like I see the workshop now as like the next iteration of potentially, it could be potentially like the V3 course, where it's kind of combining everything from the books and everything from the webinars kind of up to date now. And that doesn't mean that the workshop is better than the books or the books are better than the workshop. It's more so the most up to date information is the most up to date information. The most up to date definitions, interpretations, etc. are that. Right? Does that make them better? Yes, no, maybe so. Like there is no correct answer to that, because like some people resonate much more with like V1 content, even though a lot of the V1 content has been changed a bit, right? But some people just interpret that a little bit more easier than what we do now because maybe it's much more complex, XYZ. So what do I suggest starting out with the workshop? It's up to you, bro. There is no true roadmap because the roadmap itself could start from many different places. Like if I was to here, let me pull up TradingView for you. If we were to like make like a roadmap, and I'm planning on adding it to the site eventually, right? If we have a roadmap, and there are a lot of there are various starting points, right? Starting points being the courses, the books, the workshops, right? And then the Discord is obviously in addition to all of them, right? It's in addition to all of them. But the thing is because all three of them are technically available, like obviously the best way is like the best answer is technically to do all three. But if you had to start at when you started the courses, why? Because the courses have V1, V2. Then you have all of the case studies, webinars, right? And most importantly, it's free. And I know most people are cheap about things and they don't want to pay for stuff, so it's free, right? So if you want somewhere to start, that's obviously the best place to start. But if you are then considering, let's say, the books or the workshops, then I mean, the workshop isn't done. I haven't done a workshop before, and I can't tell you which one is better. Like, I don't know how to categorize that. Like, especially because there's a lot of aspects in terms of one, I still haven't done a workshop. Two, I don't know how someone learns, right? Because each one has different advantages. For example, the workshop is gonna have the recording, right? All of the definitions, all of the information, data, chart work, and it comes with the document. If you guys read the website stuff, it comes with a document, a workshop document, right? And because it's recorded, you can obviously refer back to this multiple times, and there's a free Q&A as well. Whereas the books, I kind of tried to build in everything that I could for the concepts, but the books were originally made to complement um, the courses, right? Whereas kind of now the workshops are meant to kind of assist the books, which assists the courses. So like I don't know, I wouldn't be able to tell you which the best roadmap to go about it, but all I can say is the workshops are meant to complement the books. The books are meant to complement the courses. So yeah, it's really like a personal preference thing. And also like workshop 1 isn't too expensive. Maybe workshop 2 and 3 might be a little bit more expensive. But it really just depends on how much content is going to go built into each workshop. But there's only going to be 3 workshops, right? So I'm planning on doing one like this month, then one next month, and then one the month after that. And then I guess the recordings and documents for there could be considered like course 3, V3, right? Well, I hope that answers your question. It's I really don't know how to answer that question like appropriately. Yo, can you guys still hear me? All right, cool. I thought Zoom was about to crash on me again. I don't know. I'm really sick of this app, guys. I found like 2 3 solutions. I just didn't get the time to test them out. So hopefully next week, but actually maybe like in the next 2 weeks I'll find a Zoom replacement. I really dislike this app. It's annoying. But yeah, any more questions, concerns with the workshop? Oh my goodness, bro. Um, Hold on. The website. This stuff is here. All of the literally, it's the link is posted almost anywhere RCV. So like, I even have like the link tree on my Instagram. I have the link in the Discord. Yeah, cool. And then I just all I need to do is figure out how to make sure um the recording can't be shared. That's like the last thing I need to check out, which shouldn't be too difficult. It's like with AI these days, it's not too difficult. But yeah, I'll make sure that nobody can like share the recordings, and then probably at the end when I have all three done, that'll be like itself like one final package. Who knows? We'll see. But I am trying to put a lot of effort into these just because they are 3 workshops. So let me know if you guys think there's anything else I'm missing here. And I also tried to organize it in the best way possible. Right? So it's going to incorporate everything from like V1, V2 course plus the ebooks, and it's only related to everything solidified points and up. But yeah, anything else? Do you guys think I missed anything on here, or does it look fine? Yeah. So yeah, that was kind of the goal. Like I said, the goal is to set the foundation. Cohort 2 have be the models, everything model related, and then 3 is the combination plus conjunction of other things. So 1 foundational, 2 models, concepts, models, and then filling in the gaps. I wanted to do like 5 of them, but it was hard to separate like the models. Like I think it was not appropriate to have the core models and then the sleep models be a different workshop. So I just made that all into one. But yeah, let's go ahead and get the charts. That covers that. Ooh, excuse me. Come back to that. Let's see. So what I want to do today, right? I didn't take any trades this week. I was looking at charts. There was like a couple of positions that really kind of stood out a bit to me. A couple of setups, and the main one was like EU. EU, I believe, a couple of days ago. This was like the main setup that I was kind of looking at, which was here. After these 2 bearish engulfing, or 1 bearish engulfing, break of structure, this is what I was looking at. We'll come back to this. But other than that, there was nothing I was like, I was kind of liking. I wasn't really liking anything. Nothing really was standing out to me. But we'll go ahead and go into that. But let's go ahead and review a couple of things. I want to restart everything today. Right? Why? Because we do have quarterly closures as of yesterday. I think, yeah, as of yesterday. So the only thing that really matters to me in the 3-month time frame is that closure. What does this closure mean? It looks like we have rejected and we are closing relatively close to the previous highs. So I see this as a massive rejection to go higher. I don't know specifically what this kind of candle is called. Maybe a hammer. I don't know. I don't really know my candlestick patterns like that. But all I do know is that we have swept, right, very important lows and then automatically reacted to the upside, and we have closed relatively high and high relative to the previous candles, right? That's what I mean by high. The cool thing is that that translates on a internal scope as the accumulation that we've been talking about for the past couple of months now, pretty much the whole year at least. And now that we're seeing this kind of continue, I'm more than likely expecting this as an immediate target from a medium term perspective. And the accumulation is kind of pretty much set now. The only thing that would invalidate my entire setup would probably be obviously down here, but if we were to even challenge, let's say, this low, then I am going to be very curious to see how we react from there. Why? Because if we were to substantially break this low and this low, then it would imply that we've swept this, right? And that we're going lower and that we're probably looking at a bearish sweep. So if we're looking at then a bearish sweep, then I would obviously look for lower pricing. But as of now, we've broken this. We've broken this. We did have a potential dual sweep setup. I'm not going to lie. This was a bit concerning at the beginning of the week or middle of the week, I think. But that doesn't seem like it's wanting to work out, right? I think that was Tuesday. Yeah, Tuesday. Bearish engulfing, dual sweep. But that dual sweep, if we then go to a smaller time frame, right, that kind of failed to continue lower. So obviously, if we're seeing this and we're seeing high momentum come to the downside, then if I want that dual sweep to fully be confirmed, then I would expect this low to be taken out. And if that low is taken out, then it's like I said, we're probably going to take this out. And if we take this out substantially, then I am looking for a transition to go lower. Right. So pretty much this impulse of high momentum comes into play, relatively sell to buy, internal sell to buy, and then external sell to buy. Because this is now present and we have now seen high momentum, right? I am now more so aligning this to continue higher. Why? POI, unwillingness, high momentum, and so therefore I'm anticipating this to continue higher into that green line that we've been talking about, which is good because it follows the bias that we have been talking about for the past couple of months. And two, that probably means we see lower pricing here, which I am anticipating for us to probably continue lower. It really does look like we've sustained below the CBOS. So we're obviously within this bullish range. There's a sell to buy, sell to buy. So I would love to see this go lower. And this would be the consequence of seeing dollar go higher. Right? Consequence, effect, same thing. So yeah, that covers that. Then this here, this one as well, because of the sweep here, I think. So because of this sweep here, I think EU did not sweep. No, it did not sweep. So because it did not sweep, and we're looking at the internal structure, we're technically in no man's land, right? A perfect example of no man's land. This is also why I didn't really want to trade this week, right? Because, and we could just do a sweep here, sweep a fib, right? So if we're looking at this range, right, based on this time frame, right, once we solidify here, that structural disruption, meaning going to the downside, it's continuing lower. Therefore, this is now unwillingness, right, based on this high. And as soon as we then see internal highs be broken here, right, we now have solidification, which is another set of unwillingness based on this low. So we failed to break a high, we failed to break a low, so we're stuck in a range. And if we're stuck in a range, then we're technically in no man's land. So technically, I would love to see, obviously, right, some type of dual sweep or traditional sweep here. But because we've already felt the break 1 time, 2 times, I would need to see this cause unwillingness, right? Because then we failed to break the low again. So then we're still technically stuck within the range. And then we see something higher, maybe take out a previous weekly high. I mean, I think this is March's high. No, not March's high, but pretty much some significant high. Why? Because it covers all of this price action, covers a lot of time. And if that is to then present me an idea, then that would be cool. But like, I'm just speaking hypothetically here. Like, there's no reason for this to go higher right now. So right now, all I know is that we're in no man's land, and I am uninterested. Right? Don't get stuck trying to play this stuff. Like, I mean, you can. I'm not gonna stop you, because there's technically like a decent position here, right? Where you see high momentum come into place, but we did not sweep. So if we would have swept there, then maybe I would have considered that. But I am also acknowledging that from an H1, maybe a zoomed out H1, but from a major intraday sense, we're probably in no man's land, and we've already sold. You know, we've already kind of sold a decent amount. So I would much rather like to see that's external CBOS, right? Why? Because then that would then solidify high, low. And then we can probably continue lower, right? So that's EU, no man's land, not interested. GU relatively the same, but we are still trading against this sweep here. Right, sweep that we talked about a couple of months ago. But this one's actually this one's a bit cleaner than EU actually. I didn't really look at this one too much this week, but from a directional sense, technically we failed to break that high, but I think EG was a bit different. Yeah, EG was a bit different. It actually did break the low, hence the move to the upside. So we swept, high momentum, continuation, high momentum, probably continuation. But I don't think that broke either. So yeah, no, it did not. So as of now, we do have equal highs being resting here, but you guys know that doesn't really influence the bias. It's just the target if we were to be bullish. And the only way for me to be bullish is if I was to see maybe a internal sweep here, high momentum, and then hopefully like a transition here. That would be the only reason why I become bullish. As of now, this is still bearish, but like I said with EU, this one's been going for a while now, you know? It's been going for a while, so I would need to see some type of intraday failure, which would then be something like that, right? That then would give me a bullish to bearish transition to then aim for target 1, target 2, right? That would be the only thing that's kind of viable based on the direction right now, because we're still trading against that sweep. And technically the opposing side of the sweep is the slow, right? So this one clearly more bearish than EU, but I just cannot justify any type of longer term position right now, because this has been selling off and nothing has failed. Right? And why these highs? Because those highs all created lows. So I would love to see something break. For example, if this was to have swept, then I would have loved to see a transition here, because then that would have been technically a failure to go higher, right? That would have pretty much confirmed that. And then so if this is to then fail, then we're 100% going for here, right? But it did not do that, so unfortunately, right? Just kind of sitting on my hands at the moment. This one, last week's position still kind of playing out a bit. Actually, we'll come back to this one at the end. We'll come back to that one. I think UJ continued higher. Yeah, kind of. Yeah, this one's a bit weird. Like we said, because of the failure to go lower, we're kind of anticipating this to go higher. And what do I mean by the failure? That was here. So we had a sweep. Dual sweep, break of structure. We were looking for this move to the downside, but because this reaction failed, this is technically the range that's in play, right? And that's why we were anticipating this to go higher. I don't know if I said that last week in the Zoom or last week in the case study, but that was kind of the bias, right? And even though we did see some bearish movement, we failed to break a low. So as long as we break this internal high convincingly, I'm anticipating this to go higher. I don't see a reason to fight the bearishness, especially because the one bearish scenario failed. So I would even argue that looks like a 71. Yeah, just about. So I'm anticipating this to go higher. And this range is a bit weird because technically we didn't solidify the entire range. If you guys see here, we have one leg, two leg. So because that didn't solidify, technically the 70% isn't there. So I'm kind of forcing this fib. It's not like a fully valid fib. But all I know is that potentially maybe we see OFD and hopefully take this higher. And what would be the next step? Then that would be this, right? As we talked about before. So I would need to see a failure here, right? Yeah, I think this is setting up people for a trap, if I'm being honest here. Why would I, like, if you're looking at this now from, like, let's say here, why do I think this is a trap? Because we already gave an attempt to go lower. That attempt failed, right? But there's still relative equal highs. There is a potential sweep. But that sweep also did not break the internal low into the high. So because that didn't do that, and we now have high momentum, I think this is not a reasonable sell scenario. No reasonable sell scenario, so I think we're probably gonna go higher. Obviously, this could change next week, right? Like, there's many things that could happen. Like, from here, we sweep and then we fail. Okay, now I'm interested in sells. Now I'd be a little bit more interested. And this move here would have to be carrying some decent momentum. Or we reach the high and then we have a dual sweep. That's a completely different scenario. But based on what I see now, I cannot make that inference. Right, this one was a bit messy. Did not like this one. But the high did actually reach. So this is a cool little example, guys, because you guys know that I was super bearish on this like 2-3 weeks ago. So it's a good thing for you guys to reference this. So I was, excuse me, I was very bearish here, right? Because of the internal sweep. And then this is one of those scenarios where everything kind of aligned, right? Hence why we were selling like here and even here. So as of now, everything is no longer aligned, right? Clearly, duh, right? Clearly, a lot of everything is bullish now. So because it is, and we just swept a important high, then let's reconsider something, right? And what I meant by this being an interesting scenario is like we were bearish here, and then because that failed, you guys now see that if we fail to break a low, then we're going for the high, right? And failing to break a low could be unwillingness or a sweep, because there's only two things that can happen. You either take the low or you don't, right? And then you can add more complication based on how it doesn't break the low, because it's different to have this type of unwillingness than it is to have this type of unwillingness. But the point stands. Either you broke the low or you didn't break the low. And you did not break the low, right? So you did not break the low, so you break the high. Easy. But now that closure is scary because it kind of complements the DXY closure, right? Because the other ones were obviously clearly bearish, right? Like I don't even need to show that for like EU GU. We're technically bearish across the board. XXXUSD across the board, right? But with UCAD, it's a bit more complicated because we were bearish from a macro scale. So it's what makes it awkward. This one we were bearish on the macro scale because we're bearish range, bearish sweep, bearish move. So because of this closure, here's the only thing that I'm paying attention to because it's contradicting me. So I have to kind of adjust the not to say my rules, but my approach. That's the only high that matters to me because you guys know what I tell you guys about how something that fails can immediately fail again and then favor your original position. So it's a failed move, and that would lead to the continuation of your original idea. And that could be interpreted by like let's say you have a sweep, right? And then you have an internal transition. But then this fails, right? And you then see an internal sweep. Right, that fails because now you're continuing this. So technically order flow completion is going up, right? So then from here, let's say it fails again. Whereas then this is now a variant of a dual sweep. And now it failed, the traditional sweep failed, but if that failure failed again. And because that failure failed again, then that's the one that works. So based on this logic or that idea, that approach, the only thing that matters to me now is that this technically invalidates my bearish bias. Right, it's a strong closure on a 3-month time frame. Very important. That's very, 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 very important. What? And I'll show you guys some examples of why that's important here in a bit. But now, if I am to look at this now from a swing perspective, all that matters to me is if I want to be bearish again, then I need to cater to that closure, meaning that we have swept this low. So let's sweep this high now. And if we sweep this high and we fail, or we have some type of major intraday transition here, then I can once again be bearish again entirely, right? And maybe, I don't know, is there a POI up here? Let's see, right? This is a lot of prediction too. This is not necessarily current bias. Yeah, yeah, so I think, did we tap this? We did not, so that could potentially line up, right? And if that is to line up, then it's cool because then you can apply a sweep because you have a bearish range. All right, so because you have a bearish range, then a transition here, which would probably take, I don't know, like a couple days, week. Yeah. Oh no, like a month, sorry. Yeah, I would hope for this transition to be like a month, which means it would have to have time because obviously we're looking at a 3-month closure and we're looking at this type of transition here. So we want something like this, but inversely, right? And this took 2 months. So if we have this type of transition, if you that inversed here, then I can be fully bearish again. What does that mean now? Then that just means I'm bullish, right? It just means I'm bullish, but I don't like UCAD sometimes because it just kind of drags itself. I don't know how else to describe it. Like you guys can see here, very efficient price action. Like no gaps, a bunch of wicks, and it's kind of just dragging itself up. And this is probably like oil based. All right, it's probably like an oil based move. Yeah, that's crazy. Actually, that's crazy. We're back to 2022 numbers, almost. Oh yeah, we're going for. Yeah, this is done. This is done. We're going for here, easy, but maybe here. Who knows? We'll see. But yeah, UCAD just tends to drag itself up. So as long as it drags itself up, then I see 1.42, 1.4415 being a relatively reasonable target. Last one, this one, the only interesting one I think out of all of them. Excuse me. The only interesting one. Why is the only interesting one? Because a lot of stuff is aligning based on the position from last week that I told you about, the high risk position. And even today, that's a high risk position because it's the outcome of that move that gives me the assumption that I had this week. Like, and before you say duh, it's like, no, I mean, like, that move verified the transition of bullish to bearish, right? So actually, we can start from the top here. Look at this closure. Like, not the best closure, right, compared to the rest, but look at this monthly. Engulfing, technically, technically, I'm not going to call it an engulfing, but technically, you know, like, it closed below the previous high, right? And if we're looking at the price action internally, right, we've very clearly swept here. We have very clearly a bearish sweep here. And so this is kind of what I would want for UCAD, right? Like this type of move here for me to try for once we reach like up here, right? This is the type of move that I would want. This type of transition, right? It's like what, 2 months, just about. So because that's around 2 months, and we've swept very important high here, very important high here, and who knows? Maybe there's like a POI here. Who the fuck knows? Right? I don't really care for that. That's irrelevant to me. So we're technically overall bearish. So this is one of those that's aligning. It's aligning very nicely because high into low, that was a sweep, strong bullish reaction. That technically failed, right? You guys can see here. And what defines the failure? We have a solidified low. That low is then swept, or I'm sorry, broken through. And ever since then, right, we've been kind of bearish, and we now have a sweep because technically this move invalidates the bearish bias. But because we have a sweep in play, and because we have internal breaks, then I am also now bearish again. Right, so I'm allowing the sweep to potentially void the bullish structure because that's the whole point of a sweep, right? And we're still in alignment with this. So what does that mean on a swing / intraday POV? Clearly, we have a very clean distribution here. Why do I say distribution? Easiest way to put it, we have a range. Range has equal highs. Highs are swept. That high is then broken. And we're now kind of testing ourselves at that high. And this is kind of what I was telling you guys that this is the only position I was interested in because these are like pretty long-term positions. Like this is kind of setting the bias for the quarter, right? And if I then go to H4, look at the internal structure here. We have now converted to bearish. So note that our intradays and our swings are starting to transition. But in order for that to cause the transition of the macro, then you need the targets of the intraday and the swing to be met. That's why once everything is aligned, it's kind of hard to catch a position because the leftover move is it's very minimal. So because it's very minimal, we're seeing this kind of start to transition as a whole. And the intradays and the swings are really the important ones because those are kind of what we base our biases on. Especially as with any type of intraday trader, like the swing target is kind of your bias setter for the most part. So low and too high, like I said, that's broken. Equal high swept, potential distribution. And I see the tap based on the buy to sell, right? Where's the buy to sell? The final buy to sell technically is here. And that's being tapped again. And this is this ties to like points that I've said before, where like you can really make support and resistance technically viable if you follow like some type of logic consistent to what we use is what we use. You've made previous observations on things that cannot count within moves. Anything that helps us correlate between our macro timeframes and bias expectations based on what? What's the question? Let me read that again. You've made previous observations on things that cannot count within moves. Yeah, momentum. Anything that helps us correlate between our macro timeframes and bias expectations based on how a transition was developed. Oh, I see. Well, I think I changed my approach to this sometimes. Like I try to make sense of things as they come to my head, right? Which is the problem with like discretionary trading, but that's a whole nother conversation. So like don't see something that's been working for me, especially from the intraday sense, is like don't see clearly these are all levels, right? And there's more levels than what are present here, right? There's more levels than what are present here. This is just like a base, right? But because there's a base, right? Don't see these all as different levels. See them all as one producive level. So like, but there comes a lot of assumptions with that, right? Like so when we come to the 3-month, right? And if I'm an intraday trader, the 3-month is irrelevant to me outside of the closure of the most recent candle. That's why we like to see these closures once they close, right? But that's on a 3-month sense, and this is above a macro. It's like a position, right? Like I don't have position on here. I could probably add that later. Um, but it's not really that relevant outside of the closure. The direction here isn't really too important because clearly you could say we're bearish or something. But in order for this to be relevant, we would have to be swing traders and we would have to wait weeks for the positions, right? Which nothing's wrong with that, but that's just the consequence of wanting to trade the direction of the 3-month time frame. But based on the 3-month time frame, the only thing I care about is a closure. Same with the monthly, for the most part. Really just a closure, right? For these macros, the closures are really what matters here. But if I want to correlate that, I want to correlate the closures, right? I want to correlate the swings for potential direction, potential targets more than anything. Because if I have like a swing, a weekly closure, right? Let's say we close like this next week. If I'm bearish, then I'm clearly wanting to aim for the previous weekly low. Clearly, like. But once I start to correlate, let's say my intraday and my minor swing, etc., then I want to use these time frames to kind of be what's guiding my intraday direction, right? Whereas, let's say here, if I'm looking for a position next week, right, which is what I was getting to, right, and let's say the position that I wanted to take was here, right? It was based on this tap, right? I'm not really taking this because it's a tap. This is just another confluence. I more so was looking at potentially taking this because of the combination of the 3-month closure, the monthly closure, right? The intraday direction, right? Which is major intraday, minor swing, right? Because of this direction, clearly it's bearish. We have a pullback, right? Sure, duh. But more importantly, this catches my eye a lot. Why? Because we're looking at transitions. The entire point of solidified points is to measure ranges, and the point of those ranges, in order to actually trade them, you just care about transitions. That's the only thing that really matters because this is the timing of the trend. So it's just using the same principle of the trend, but on a smaller time frame, to then catch the transition so that you could aim for the low, right? That's just what continuation is. You want to catch the transition, and then the entry is the easy part, right? But if I had to answer your question like straight up, this is what I was going to talk about in the workshop too, is whenever you're finding your levels, find a core time frame. Like let's say I'm looking at like H1 or H4, look at my core time frame and look at the levels that are present here. And so for example, here, the only levels that are present, right, are clearly the full range here, right? And then there's obviously the internal move here, right, which is low into high. And then clearly then there's high into low, right? And so there's usually like 2 to 3, maybe 4 levels per time frame, depending on how much data you have present on your chart. And depending on that, then you can use that as your main source of levels and then correlate beyond that or below that accordingly, which means like, yes, there's like 14 levels of structure if you really go through from bottom to top. And that makes it a bit complicated to want to correlate a bunch of them. But if you want to know which ones to correlate, then start from the time frames that are considered to be your base time frames. Because most people have like a smaller time frame, a medium time frame, a higher time frame. All right. Do I have one set? Not really. I have a range per se. Like my medium time frames are anywhere from like M30 to H4 depending on the scenario, because at the same time, like time frames are just different representations of the same data. And so finding harmony is just finding the correlations between your smaller to higher time frames. That's an ugly H. Sorry. So finding a base time frame, finding the levels there, and then using the smaller time frames to enrich the timing, but then using the higher time frames to potentially find a target or to solidify your middle time frames directional bias. That's what I was going to talk about in the workshop, because there's no real way to go about it. Like all I want you to know is that there are maybe 12 to 14 levels per pair, and using the correlation is it's a bit complicated because there is no like you only use H4 to measure swing direction, because that's very complicated to say, because a lot of different pairs have different conditions, and if you want to map out what conditions are, it goes back to that UCAD example that I gave you guys 2 weeks ago. Do you guys remember that? Do you guys remember when I pulled up two sweeps and I asked you guys what the difference was? Right, where it was we were talking about, I believe we were talking about this sweep here. Talking about this sweep here, which is like a H1, H4, right? We're talking about this potential sweep continuation and comparing that to this sweep, right? Do you guys remember that? Like the point of that conversation was to show you guys that the the model itself, like that we're trading and executing off, could be relatively the same, but you aren't probably not considering the conditions before that. So like if I'm looking at this here, right? If we're looking at this sweep here, very clearly equal high, so we're anticipating to go lower. Duh, right? But if we're looking at then the H4 and we're looking at this transition or this sweep here, not the same sweep, but a sweep, a sweep itself, which means that we're sweeping and then we're looking to go lower. Duh, right? But even though you have the same sweep, are you measuring the fact that this condition, even though it could potentially be very similar to the previous one, is this here, right? Is this condition of the position, which would be high into low, is that the same as this? Is it the same? Right? Yes or no? Was it the same or no? Is it the same or no? Is this condition for this sweep, so we continued lower, is that the same? Why or why not? That's really the question. Why or why not? Would this then be the same condition as that weekly time frame? Yes or no? I'm curious. Like different PA. Okay. So no. Anybody else? Yes or no? Yes, fractal. No, it's not the same. Well, the first one is a sweep. This is a sweep. This is a sweep. This is a sweep. This is also a sweep. I'm not talking about the sweep itself. The sweep itself is clearly different. Right? But both of them did sweep. Except the reason why they're different is because, let's say we're referencing this. We're referencing this sweep. This sweep is a whole lot more probable to trade than the first one because we have, let me see. Where did my Zoom go? What the fuck? What the hell? Oh, I despise this app, guys. What the hell? Despise this app, guys. I am over this app. It's not even my computer. Like I don't have like a cheap computer. Like it's so irritating. It ruined the lesson for today too. It's so annoying. Yeah, guys, I'm sorry. I don't know what's going on. I'm so over this app. But the recording's still on, guys. Don't worry about that. The recording is this is why I switched over the recording platform as well. But I'll definitely have another solution by next webinar. Yeah, I'm so sorry about that. That's so irritating. I'm sick of this app. I'm done with this app after today. Cause it's not even my computer. Like my computer's fine. Yeah, my computer's fine. But yeah, I'll just have to find another solution. I'm so sorry about that, guys. Cool. Is everybody back on here? All right, give it a couple more seconds. If you guys have any case studies, we can go ahead and review that. But pretty much the answer to what I was trying to get at. The answer I was trying to get at here is fundamentally, this cannot be the same as this sweep. It fundamentally cannot be the same because this is being supported by this sweep, this move, but there's also unwillingness here. So because there's unwillingness here, yes, there is a potential high-low retracement continuation, but because there's unwillingness, right? Technically, this was aiming for here. That was the target of this, right? So technically, this can fundamentally not be the same as the other one because that is being then supported by the move itself, which is this sweep itself, right? That failure internally here is being also supported by this move, which means it's being supported by easily 2 to 3 more levels of structure. Whereas fundamentally with this other one, if we're looking at this sweep itself, the only thing supporting it at the moment is this. So if this is the only thing that's supporting the sweep, then by default, it has to have less probability, have a lot more assumption, a lot more open to interpretation than the H4 does, which then this one does, right? Because there is much more scalability from the H4, whereas with the weekly, you're a bit more limited, right, with the amount of data that you can possibly have, right? And even if there was more data, like as you can see here, this is kind of just very range like from a general sense, because maybe that's just the nature of currency, right? So fundamentally, this move can only be supported by this potential range, but then this potential range is not all that secure either because of the lack of data. Then if you compare that to this can be supported by the unwillingness here, which is being supported by the sweep itself, which is supported by this sweep right here, right? That sweep, unwillingness, and then this is a continuation of that unwillingness to go here. So that by default is a lot more probable because you have an external bias, right? And then you have the support of that external bias, the confirmation, because this unwillingness, right? This sweep is nothing actionable at the moment. To take a sell here is high risk. That's why the AU scenario from last week is high risk, because I hadn't waited for the overall transition. And I'll come back to that. But this unwillingness, right, once that breaks, is supporting this. That's what's validating this, right? So internal moves are validating external moves, and that is very important. I'll come back to that too. But then this is the actual timing, right? Whereas now you can very easily assume that we're going for this. So if we're going for this, then as long as you can create the scenario for you to enter, then you're golden because you have external supporting. Whereas then the other one does not have that type of backing, right? And because it does not have that type of backing, then they fundamentally cannot be the same type of scenario, even though they're both sweeps. So to answer Jalen's question, I know he's not on the call anymore, but to answer his question, how do you correlate? Well, one, what type of trader are you? Two, do you have a core time frame or core time frames? Because typically I like to sit between, these time frames. All right, and then maybe for execution, I'll go to like M5, potentially M1. And then if obviously because it's the first of the month and the first of the quarter, then it makes sense to want to look up here, right? So, but for the most part, these are like my core time frames, right? And they vary based on pair, based on situations, because clearly there is no rudimentary way to go about looking at or to categorize your structures. It all kind of depends on the asset that you're trading. Because if you have like these as your core, let's say I have H1 as my core time frame for UCAD right now, that may not be the case with, let's say, AU, whereas maybe my core time frame might be M15, M30 because that just looks a little bit better to me. Right? And that kind of hopefully answers y'all's question. Does that make sense? Yes, no? What do you guys think is the gist of that little rant of mine? Pretty much the gist is you cannot have like a set I just don't I think you can. Obviously you can have like a set time frame for finding your bias, finding your targets, finding your executions, but it cannot be the same for every single time, every single asset, because every single asset has different combinations. So like obviously like I have the base time frames here, right? The base levels here, and I'm hoping to expand this with like the next version of the indicator, which should be free for the people who have it, right? But the the gist is like the different combinations of biases is going to influence a lot what your base time frame could be. And as long as you understand that, then you keep an open mind. And if you keep the open mind, then you can kind of see what I'm trying to say. So that brings us back to this, right? This is the only one that I care about for this quarter, if I'm being honest with you guys. This is the main pair that I care about this quarter. Um, because of the combination of the levels. The combinations being, like we said before, this is being swept. We then have a very rangy scenario, right? Very range-like scenario. But this is very nice because if we're looking at this now from like a Wyckoff POV, did I? Okay, here. Right, if we're looking at this like this, then we are here. Right, that we are here, and that's why this was that's why I was entertaining this, because the position from last week, right, which is up here, or up here, sorry, that confirmed the entire transition, but that move was required to confirm this full transition. So now, if I even have like a sweep next week, right, like let's say this is considered high momentum, order flow completion, we have a sweep and a transition, this is super A plus, because you have the potential of seeing this kind of melt, right? Of seeing this type of caliber move. Oh, what the? Sorry. Of having this type of caliber move, but inversely, because that's the point of trading the transition, right? All we want to do, it doesn't matter which direction the transition goes, but just that you understand that the transition is there, whether it's bullish to bullish, bullish to bearish, bearish to bearish. It doesn't really matter. That cycle, that Wyckoff cycle, all that I care to see in that Wyckoff cycle is what does the transition say? Which direction does it go? Up or down? And then can I correlate these transitions across different time frame levels to find a reasonable position that I can take, right? But yeah, like I said, that tap here, the transition here, this is what's important. The momentum here, this is very important because this shows intention, and we're also breaking, right, the final highs that went into, right, the previous structure tap. So that's why I was entertaining this. I missed this. I was actually going to take this. This is going to be my position. I wasn't able to catch it, but this is like my ideal position of the week. This is gonna be my one position of the week, right? And why? Because buy to sell, right? Transition, top, overall distribution, right? And I was obviously aiming for
This would be my first partial here. And I was aiming for that low, right? That was like my intraday position, right? And I mean, the bias still stands, right? Like this, I think this is a news move, I believe. But this is just an excuse. Like we already knew that this was going here based on the distribution and then based on the internal transition. So external bias, internal momentum being the transition, and then the important breaks are there. So not to mention like the momentum back into the POI was very, very slow. So now like, this is breaking here. So I'm expecting this to probably roll over. Unfortunate that we missed this one, but it is what it is. But yeah, do you guys have any more questions, concerns? Do we have any case studies? Because I think I've gone through every single pair now. Do you have any case studies to show? Do. What's the chat been saying today? Okay. Not bad. I see. I understand. The only thing kind of holding you back here is this, right? This is, you could say it's equal highs, but that's why we don't use this as a measurement of bias. It's just a target because all equal highs are technically is unwillingness, So if we see this as unwillingness, but then to use this as a bias, then it's contradictive. Yeah, see, so because there's unwillingness, then this sweep, this POI, if anything now, this would be like, if the momentum is like slow here, then that would mean bearishness. But it also depends on if here, let's say we stall, sweep, and then go higher, okay, then I would be able to be bullish. Yeah, so you see, this was not tradable. Not for me at all. Sweep. But if I would have seen something like this, okay, then I can trade it. But then you see high momentum come into play. So then I just don't see this as tradable. But very nice, bro. This is very nice. Yeah, let me. Hmm. I only have the post on GU that I shared and you replied to, but I wasn't able to take it. I mean, you can show it to me here, bro. I don't remember. Okay, this is important. This here is like the key. Let me use a different color. All right, this is the important thing here. How can you anticipate a sweep? You can't anticipate a sweep. You let for the sweep to happen. You don't wait for the sweep. You don't predict the sweep. You play if the sweep is present. Right? It's kind of like what I mean with trade what you see, not what you think you see. Like it's like saying I'm gonna trade the sweep here. It's like me saying that. I can't say that because the sweep has not occurred. But if the sweep occurs, and then let's say maybe it's like a failed here, like something like that, then if the sweep is there, then I can play. If not, I can't anticipate it. There's no anticipation. There's nothing to anticipate. We don't know how the market moves, but we know that if something presents itself, then you can trade in favor of it. or in alignment with it. Sorry, not in favor, in alignment. But back to here, this is important. That's key. And then you have unwillingness. That's cool. This is a high risk entry. This would have been a high risk entry. But the position here, I mean, I would probably just do this if you want to force it, because I would probably force it here, if I'm being honest. Just because this is like a transition, and I know where AU is on a higher time frame. Like, I would probably just force the whole thing here. You see what I mean? But then I would aim for here. Like, if you're already reading the transition, then let this be your partial spot, and then let it run because you're catching the transition. You see? Yeah. See, so like if I would have had that full thing here, like we said, like if we have this full potential TP, maybe there's a way to save this. But this is fine. Even if I do lose here, right? If we're also looking at the overall picture, like this is bullish, right? Then if we're also anticipate seeing this occur, then you have a re-entry here, which is this is my original entry, remember? So just because you take the loss here, I mean, this is still worth taking. You want to take positions worth taking. Like if you take a loss, it shouldn't really matter. Easier said than done, right? But this would have been here the perfect entry. And in hindsight, right? In hindsight, we do have a sweep, but this is still technically bullish. So technically, you want to wait for this full thing to break. If not, invalidation here, like you said. But yeah, I mean, I would just say here, bro. You're working really hard to measure the transition, and you're using the transition, but you're ending it off too short. Like if you're gonna do that much work, then at least see how far you can go. Okay, I'll come back to those. 1 second. LGC, sure. Sure. I don't like this entry. I don't like the entry at all. High momentum here. The LGC model is technically correct. I don't know how the external is, but I don't like this entry at all. It looks more like unwillingness here. So because we're unwillingness to go higher. Don't like that color either. Right, so if we have that, then unwillingness, I would much rather hopefully see something like this. That would be cool. But yeah, you see, that's fine. That's why we see this then fail. But I don't like the execution based on the time frame. Maybe on smaller time frame there's something better. Maybe. But I don't like this one. But the bias was good. The bias was good. The bias, the biggest thing with your bias too here is this. That big engulfing. Engulfing equals momentum. Okay. 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 So this is technically a sweep, right? This is a sweep. High to low. There is a range. Let me make the drawings a bit bigger. Right, that's technically a sweep. Because you have high to low, and then you have sweep range. So this is a sweep. You just need to transition internally. Is there a transition internally? I mean, this is high risk. I don't see a failure. Maybe on M5 there's a transition here, and then you can play based on that. But on this time frame, I don't see something fail yet. Right, the failure on this time frame would then have to be like here. So then that solidifies this low. And then once you break that, then you have an entire perimeter. And then you have the full move here. But you're supporting these moves to this potential bias, which is why you see the reaction. And then the follow through is then, different, because then that's why you take partials here. Like the partials based on, if you, let's say, catch it here, it would be maybe here, and then maybe here. But there's also like a sell to buy. So you could maybe even take a partial at the POI. But yeah, the only thing that's holding this back is this. This. Okay. Yeah, this is good. This is good. Yeah, you see on M5, this is good. So the reaction, perfect. This is good. Low, high, retracement, POI, came into POI, reaction, failed. This is perfect, bro. This is perfect. I would just use this. You could use this whole thing as the entry. That. But yeah, but that's good. And then, like I said, when it came to partials, like that's clearly a good partial. And then once you see this reaction here, then it becomes a bit complicated. So you can either keep it at break even, either potentially take another partial as we're going lower, or once you like here's you can clearly see the full transition, so that could be a reason to exit. And the transition is because of the volume. I mean the momentum. Sorry. Yeah, you see, this one was good. I like this one because it's not like it follows the rules, but it's not technically like my type of model. That's why I like this one. High momentum, that's like the big thing. And then you use the full zone, which is good. Right? So by nature, it's a bit aggressive, but the high momentum here is, I think, the thing you should really know. And if you ever find another scenario like this, that's what you should pay attention to. The high momentum. Right? And obviously the internal sweep. That internal sweep into momentum. Look at that combo and tell me what you find. No, no, I'm not getting into that today. That will be in the workshop for sure. That'll probably be in the workshop. Workshop 2. No, that's not a sweep. It's a range, sweep, POI. Like this was technically potentially a sweep, but we already talked about this earlier. Um, we could say that this is a sweep, and you could say like this, but I'm not confident this is a sweep anymore because of that momentum here. That momentum came in before this. Like, is this a sweep? I would consider that the target. This would have been the target of like selling here. Yeah, the sweep, the little internal sweep. That's really cool. That's like a really cool little detail. I find it a bit hard to explain sometimes, but when it does that little sweep like it did on your GU trade, that little sweep here with momentum, that's a very cool little entry hack per se. I like these. Oh, Do yourself a favor, bro. Change this black color here. That's so hard to see. Change that dark bearish color, bro. um, is this a sweep? If this was like a range, maybe. I like this entry too. That was a good entry. Why? Because you're sweeping this, and then you see the failure, right? This is a good entry, and I'm assuming you kind of took out the position maybe around there, and then you have another external sweep, internal continuation, unwillingness, and then the failure. This is a good entry. Do you have another? Do you have like a zoomed in view here that I can see? Okay, that's a bit better. Yeah, you should make this green a little bit more vibrant. You could do this. Like my color is like this. But yeah, I like this because you have this bullish move. You have the CBOS. You have unwillingness here. But more importantly, like it's a bit aggressive when I say we're here, right? So technically, I'm anticipating this to go higher. The only thing that's holding that back would be the fact that there's unwillingness. So the fact that you waited for this transition is perfect. So as long as you're aware that you took this transition, right, then you're good. But pay attention to also like discrepancies in momentum. What do I mean by that? Like this is technically high momentum, and this is also technically high momentum. But obviously, the immediate move is always the more important move. Um, so I'm just saying that because if you are if you're acknowledging the momentum here, then I think it's good long term. The only issue here now is then if your entry is like at the inefficiency, or if you want to just go based on the internal buy to sell, that's what makes it a bit more complex if you want to replicate this type of position. Right? Yeah, so that's the cool thing, because like yes, it's a winning trade, it's a good winning trade, but the point is you want to take at least logically like a similar trade every single time. It's really hard to take the same trade consistently. And I explained that with the UCAD thing, where like different scenarios are backed by different combinations of models, structure, etc. So like here, this is clearly a reaction, but the problem is like we said, high momentum here, high momentum here. But the problem is also this. So the thing is if you are to be a little bit more conservative and you start to acknowledge those things, then the problem then becomes if you wait a bit too long, then you're going to miss the trade. But is missing the trade good for you longer term? Is then like the next question after that, right? Because this is a much better entry than this one, but this one was a bigger winner than this one. But does that make this one better than this one? Not necessarily. Especially if you're logically like following the same type of position. Like if you're looking for the same approach, like you know how we look at DLE and stuff like that, then if you're following like a similar framework and you get these two positions, then just because this second position got more profit, that doesn't necessarily make it a better position than this one. At the end of the day, you want to take more positions like this one because there's a very clear transition there. Whereas here, not so much, right? Like not so much. I talked about this, I think like a couple of weeks ago when I had like EU and GU sells. I don't know if you guys remember that. when we were selling kind of from the top, and the GU scenario produced a higher yield, but the EU scenario was a better entry. So just things to consider, you know, things to consider. Do you think it's necessary? I don't think it's necessary at all, bro. I hardly look at the seconds time frame. Like, I don't understand how people are like stuck on seconds time frames trading NQ. Like, bro, like you make your life so difficult. Trading is already difficult. You make it so much more difficult. Like, why are you on seconds time frames, bro? And like, not that the seconds time frame setups don't work, but it's just like, if you have more seconds, then you have more data, which means you have more transitions. And if you have more transitions, then you have more opportunities to trade. And if you trade more, then you're more stressed. And if you take more losers, then you're even more stressed. Like, you're just making life so difficult for yourself. Like, just trade less, or trade more pairs and trade, you know, trade higher time frames like M5, M15. I'm not getting into the AI stuff. No. But yeah, guys, any more questions, concerns, any more case studies? What do you mean? What about workshop? What do you mean? Oh, yeah, but your colors are bothering me. Uh, you see, this is not tradable for me. If I buy here, then I'm picking a low because the structure is bearish. And then if I want to be bullish, then I would hopefully want like a deeper retracement or have like a transition here. But if I don't have either, then I'm not trading this at all. Like, don't get caught up trying to trade every move, trying to make sense of every move. Like, it's unhealthy. Like, it's gonna cause you a lot of stress, and you're kind of just chasing dopamine at that point. It's like, is this tradable? Is this scenario tradable? Yes or no? And if it's not, I'm not gonna try to figure out how I would have been able to do it in another scenario. At least not now that I know what I'm looking for, right? But if you don't know what you're looking for, then yes, that's kind of makes sense. But this to me, not tradable. Not tradable. But yeah, you'll go crazy trying to make sense of every move. You can, like, you can make parameter, because realistically, like, on a chart, like, there's only a couple things that can happen, right? The workshop, I talked about that at the beginning of the Zoom, bro. The details are here. I don't know what you want me to say about that. The details are here. If you want to read this here, cool, go ahead. But yeah, like, you can make sense of every move. Like, it's technically possible because there's only, there's only the y-axis and the x-axis. So time goes only one direction, but price goes up and down. So there's like a finite amount of things that can happen, right? Like, whenever you go from down to up, like this transition, like there's like a X amount. It's like, it's a bunch of combinations, but there's a way to like do the math for it. It's like a couple of exponents. If I wanted to do the math just with one single level of structure, then if we're going from bearish trend to bullish trend, it could be one, or let me do a different color. It could be one, right? It could be sweep, two. It could be a variation of two, um, or it could be unwillingness, break, right? So there's like only a couple of things. Either you're going to break the low, you're not going to break the low. Then there's ways to how you go about breaking the low, or you're just going to switch. So there's obviously more, but let's say there's 3 there. Right? So if just for one type of transition, there's 3 potential moves, then if I want to correlate that with like a bunch of other levels, like let's say there's like 14 levels, then actually it's probably going to be 3 to the 14th. Why? Because then you have to like assume that, well, there's obviously gonna be combinations of like, let's say there's M5 is like level 3 and like M15 is like level 6 or something. Then if there's like 14 levels, then there's so many combinations between 17 levels. So it's a big number. It's like I think it's like a couple million combinations or something like that. It's like there's a way to reason your way about like making sense out of every move, but that doesn't mean that they're tradable. And like trying to do the math is complicated. Kind of what I'm getting at. So if it's not tradable, just stay away. Like it's not tradable, so I'm staying away. Kind of. But yeah, any more questions, concerns, guys, before I head out here? Cool, yeah. So this is the only one I'm looking at for next week, hopefully. Hope this fails and gives me another opportunity. That would be cool. Yeah, man. It's a pleasure, guys. I'll see you guys next week. Bro, why are you waiting until I'm about to I'm about to end the call, bro? You're waiting till the absolute last second. I don't know what you want me to say here. Wait, you want me to I mean, I already talked about this earlier. I talked about UJ earlier. I'm not going to validate your trade. Um, so I don't know. I don't know what you want me to say here. But yeah, I guess we can wrap it up here.